I've come to talk to you. This is not me I'm talking about, this is about our other presenters and guest speakers. So we have, the order of the event today is a quick update from myself about the property market and to address some of the key issues that we're facing in the market. Lots of things to discuss and talk about, and that question on everyone's lips: is it a boom or is it a bubble? We're going to get to the bottom of it today, maybe. Then we're going to move on to David and Zico Law. David's going to give us an update on the latest legal updates, and then we're going to have a panel discussion, because we think that is the feedback that we got from the last event is a panel discussion really gives everyone a chance to have an input, lots of Q&A, and lots of interaction with the panel. We've got two great speakers on the panel. We've got John from VSIP, and we've got Olivier from Dynasty Investors. So without further ado, we're going to crack on with the market overview. If my So we'll do it manually. So, economic highlights. GDP growth, slightly disappointing, I would think, for Q2 2016, only registered 5.6%. So that's mainly attributed to the negative growth in the agro sector and forestry and fisheries sector. This is down for the first time ever. A lot of issues in the north and the south, so the drag that you've heard about, it's alleviating now, but that's really affected GDP growth. The government is hell-bent on trying to get to a 6.8% growth this year. I think it's going to be very difficult to reach that number. CPI, we've started to see an increase in inflation. CPI up 1.7% on the quarter. Medical services and education services in particular up significantly. Moving on to FDI, I mean, this is a real sort of boost for the economy, and where we're seeing a lot of attraction about Vietnam at the moment against other Southeast Asian countries. So FDI on a real momentum at the moment. Real estate in particular, it's ranked second as a sector, and approximately 634 million US put into the real estate sector in 25 projects in Q2 alone. Manufacturing by way ahead of any other sector. Over 70% goes into manufacturing. Out of the top countries, South Korea, Singapore, Japan and Hong Kong. Visitor numbers, again, very healthy numbers for Q2. Big increase year on year, nearly 30% increase on overall numbers in Vietnam on the quarter. Interestingly enough, Chinese visitors up 70% on the year. Big increase on the Chinese numbers. Korean, also up over 50%. So we're seeing a lot of interest. That's really attributed to a lot more direct flights coming in throughout the country from those countries. Moving on to Ho Chi Minh market overview. So office, no great change on the office supply sector. We're hanging around the 1.7 million square meters. This is total stock in all grades. No significant new supply in the quarter. A couple of new sort of smaller buildings, the Tรึ่NG TRảo i Tower and 144 Công. Total buildings, this is quite an interesting slide because it gives you an overview of what the total office market is in Ho Chi Minh. So, total number of buildings, about 250 office buildings, and out of those 250 buildings, 146 are actually under 5,000 square meters. So incredibly small, a high number of buildings in a very small square meterage. And only 14 of those buildings are over 20,000 square meters. So as we move on, what we're facing at the moment is a real shortage of supply in the market, and this is reflected in current vacancy rates, and we're now at 5.4%. Which is we're sort of reaching historic lows. We haven't seen 5.4% since the peak times in 2007 and 2008. So great news for landlords at the moment. If you're a landlord in the room, you can start to be more aggressive in your quoting rents. Slightly less good news if you're a tenant, but that's going to switch over next year when we start seeing some new supply coming through to the market. Some of the larger deals that happened in the quarter, this is office deals over 1,000 square meters. Hua Group moving into Vietcom Bank Tower. Sumitomo Bank into Times Square. Mitsui moving from HD Tower into Times Square as well. Commonwealth Bank, you've probably seen their new premises on Tom. And Roche moving from E-Town into Pearl Plaza. That's just a selection of some of the larger deals that happened. So what are we seeing on the rent-wise? Overall, rents on the increase due to the lack of supply. Natural enough to see rents starting to increase overall. Grade A office rents on average now over $38. That's up 0.6% on the quarter. And overall, if you look down through, most sectors now on the increase, purely down to lack of supply in the market. So if we look into the future and what we're going to see coming forward, again, very little supply coming through for the remainder of the year. Apart from, I've spoken to Mapletree this morning, Mapletree Business Centre coming up towards the end of the year. This is a great development. Mapletree, you'll know, sits next to the business centre, will sit next to the Vivo City shopping centre, and the specification of this building is a great specification. So for tenants looking for that outer CBD location where you're getting a good quality building, this will work. Then we go forward to next year, Saigon Centre Phase 2, you will all know about, Keppel Land on Lê Loi, 32,000 square metres, and then Deutsche House on Lê Duan at 26,000 square metres. The interesting part about these buildings now, which we haven't seen before, is a lot of pre-leasing activity. Because of lack of supply, we're seeing a lot of tenants now looking at pre-leasing in these buildings quite way in advance of completion. We haven't seen that in the market for certainly since I've been here, so a bit of a change in dynamics in the market. Moving on to the residential sector, everyone's talking about it, everyone's trying to understand what's going on in the residential sector at the moment. We're going to try and give some educated opinion on what we think is happening in the residential sector. Total stock at the moment in all sectors in Ho Chi Minh for high-rise apartments, about 80,000 units. New launches in Q2 alone, hear a gasp in the room, 9,000 units. That's slightly down on the Q1 figures, down 8% on Q1 figures, but still a big number. Nearly 9,000 units launched in Q2. The split between Ho Chi Minh, so out of 9,000 units, about 4,600 in the east, towards the east of the city. Sales rates, the good news is sales rates at the moment are keeping up with launches. So all the launches that are happening are generally attracting very high sales rates. And this is unprecedented. We haven't seen this before in the market. Sales rates at the moment are definitely keeping up with launches. So that's the positive part of the story. So sales rates in Q2, just under 8,000. Again, we haven't seen these sort of numbers in the market before. Now, whether that's true buyers, or buyers, end users, or investors, or speculators, we'll leave that for a further discussion later on. But the sales are happening, they're actually happening, and this is the figures we've checked and double-checked, and this is what's coming through our market research department. So those sub-markets that are attracting all the interest at the moment, dominating in Bintang, obviously, because of the Vin group, and some of the larger developments throughout that sort of Bintang and corridor. District 2 and then District 7. But also District 9 and Tam Bin are also attracting quite a lot of interest as well. Average selling prices, we're still seeing, despite all the stock that's coming to the market, at the moment we're recording an increase in actual prices. So, on the face of it, the good news is a lot of launches coming to the market, a lot of sales happening, and we still see some price increases. So developers that are preparing new launches are still managing to increase sales prices purely because of the sales rates that are happening. So average sales price, looking at affordable, just over the $800 mark, and mid-end around the $1,400 a square metre mark, up 0.9%. New completions, and this is where it starts to get quite interesting. New completions for the next, let's say, 2.5 years, we have 85,000 units completing in the next 2 years. Again, big number. If you think back to the current supply we have about 80,000 units. New completions in the next 2.5 years, we're doubling the supply, another 85,000 units. So we'll be up to 165,000 units if all these developments carry on in the same construction progress. So a lot of activity, a lot of completions happening over the next 2.5 years. Again, you'll see on the right-hand side they're dominated by Vin Homes, Golden River, River City, District 7, Diamond City, big numbers of units coming to the market. Some of the upcoming completions for the remainder of the year, again, pretty much dominated by Vin Homes Central Park. So the Central Park 1 and 5 and 1, 2 and 3 premium will be completed by the end of the year. Moving on to villas and townhouses. So total stock for this sector, 4,600 units. New supply in Q2, just over 900 units. Again, big number for Q2. And if you put Q1 and Q2 together, that exceeds already the supply that came to the market in 2015. So a lot of activity in this sector as well. Sales rate, again, sales rate are keeping up with the demand, with the supply. So every new launch we're seeing at the moment is still attracting a lot of interest. Sales rates are very positive. All developers are reporting good, solid numbers. A lot of activity, generally in the District 2, District 9 and Nha Bay areas. Average selling price for villas and townhouses around the 1670 mark, again up 2.8% on the previous quarter. New completions going through for the next 2.5 years, what we're seeing is again a big spike in activity next year in 2017, and that's over 3,000 units proposed to come to the market in 2017. Big numbers. Again, we're going to sort of be doubling the current stock that we currently have in the townhouse and villa sectors. On to retail, quick review of the retail market. Current stock, about 1.2 million square metres overall in all sectors. Latest launch in Q2 was the Lotte Mart in Angola, which was approximately 27,000 square metres. Convenience stores, very active at the moment. You'll see a lot of activity from both domestic and foreign groups. Some of the activity in the quarter, so you see Lotte Mart on the left, which is the new Govap development, and then a couple of rebranding. So Vin Group bought over Maxi Mart, as you probably were aware of, and Vin, there's 2 new Vin Marts in the quarter as well. Overall, vacancy rates fairly stable and down slightly on Q2 2015, holding at about 8.8%. So fairly stable on the vacancy rates. And on the rentals, on average, for CBD rents, about $70 on average across the board. Future launches coming to the market, there's 2 really good developments coming through very shortly. So Aeon in Bintan will be, I think, actually opens officially tomorrow, which will be a great addition to their, in addition to their stores in Lingyun and in Seladon City. And then Saigon Centre Phase 2. This one, I think, personally, I think it's going to set a new benchmark in terms of retail in Vietnam, where retail should be going. This could be a great case study for shopping centres moving forward, anchored by Takashimaya, great tenant mix, great design, layout of a shopping centre. I think this could be a real success, depending on whether Lei Loi gets closed over the next 6 months more. So moving on, industrial. Quick view of the industrial market. This gives you an overview of industrial parks in and around Ho Chi Minh. This is quite an interesting map because it gives you quite a good idea from Binh Yuen down to Dong Nai and then Vung Tau, and the number of industrial parks that are in and around Ho Chi Minh at this moment in time. Current supply of industrial parks, approximately, out of all those industrial parks, there's about 100 in and around Ho Chi Minh City, dominated by pretty much by Dong Nai and Binh Yuen. Overall vacancy rates, this is a little bit skewed because of we've counted all the industrial parks, so overall 26% vacancy rate. But that's for total supply. We have that's equivalent to about 18,000 hectares, which sounds a lot, but because of the size of the industrial parks, it's actually fairly healthy. What we're seeing, a lot of activity on the industrial side at the moment, both from an occupier point of view and from an investor point of view. A lot of foreign investors now looking at industrial. believing in the sector as a very, very strong growth story, mainly due to a lot of the free trade agreements that have been signed off. Average rents across the parks, Ho Chi Minh. So if you want to go and buy a 50-year lease in and around Ho Chi Minh, about $115 US. And if you want to go and rent a factory or warehouse, about $3.80. And then the rest of you'll see the rest of Dong Nai, Binh Duong, sort of are a little bit lower than Ho Chi Minh. Future supply, again, a lot of activity on the future supply, mainly dominated by Binh Duong, Vung Tau, and Binh Phuc. Binh Phuc's actually looking, there's a huge amount of development in the north at the moment, so another 3,500 hectares proposed in that area. Moving on to M&A activities. The good news is M&A activities still very active. We're seeing a lot of foreign investors in the market, still looking at Vietnam, very keen on Vietnam. The Southeast Asian countries are looking a little bit subdued at the moment, so Vietnam is rising up the table, is looking very positive. So some of the key transactions you will know, I'm sure you've heard about. So Kum Ho deal has been completed by Mapletree. Great deal by Mapletree. Managed to get in off market. No one knew about it. Everyone's been trying to buy that building for the last few years, and Mapletree have secured it. So I think big congratulations to Mapletree for buying a very good quality asset. And then some smaller ones. So G Homes Development, which is Fraser's from Singapore. A 1 hectare site in District 2, and Sedona Suites in Hanoi sold to BRG Group. There's a number of other transactions that have happened, and we can give you more information on that if required. So that Mapletree, we think, from a yield point of view, the Kumo, I'm sure there's some Mapletree guys here that will give you a close an answer, but around the 9% mark from a yield point of view on the Kumo deal. So outlook, where are we going for the rest of the year, and what's going to happen over the next 6 months and moving forward? So are we going to see or the big question on everyone's mind: what is going to happen? What's going to take us forward in the next 6 months? So a quick review of my thoughts, and I think JLL views on what we think is going to happen for the next 6 months. You would have probably seen the Prime Minister very, very vocal in making sure that the economy and the growth of Vietnam is going to hit, at all costs, it's going to hit 6.8%. At the moment, as mentioned before, Q2 figures 5.4% on GDP growth. It's going to be a very, very tough ask for the remaining 6 months of the year, and we're not quite sure how that's going to be achieved. But the government are really, really pushing this, and they're going to put everything at it for the remainder of the year to try and get Vietnam to as close to that figure as possible. Which I think, our view is that's a slightly naive approach. I think it's a little bit short term, and I think that will come back to bite us next year. If we really go after that sort of figure, I think it's going to have a medium-term effect next year. Global uncertainty from the Brexit. This is the one that everyone's talking about at the moment. So last week was a complete disaster. Anyone British or English or had any EU heritage, complete shock in terms of the Brexit vote. Everyone that I've spoken to in the UK, from JLL office in the UK, completely dumbfounded by this vote. No one expected this, which is why we're going to see uncertainty in the market, and it's going to be prolonged uncertainty, because no one has any idea what the implications are. Nothing is going to happen for the next 3 months because we have the Prime Minister has resigned and they need to elect a new Prime Minister, so no decision is going to happen to the new Prime Minister, so we've got 3 months of definite uncertainty. Then we've got dealings with the EU to try and negotiate new trade agreements, etc. This is a very difficult period, certainly for the UK and EU to a certain extent as well. The knock-on effects for Vietnam, we believe, are fairly immune. Vietnam will be fairly immune. There's EU trade agreements that will need to be possibly renegotiated, but from an export-import point of view from the UK, I think Vietnam will be fairly immune. There will be, obviously, stock market adjustments, and there will be potentially some effects in terms of interest rates and the exchange rates. My big concern at the moment is with local banks and this push by the PM to really drive GDP growth is going to have a knock-on effect because banks are going to be, they've loosened their credit again. Everyone to breathe a big sigh of relief because the new decree can come in back with credit or tightening of credit. Local banks now are lending again. You see a lot of developers that are highly leveraged in the market. If we see a slowdown in the market, if we see interest rates rising, if we see any tweak in the market, the banks are going to be the ones that are going to suffer. Office market overview, I mean, fairly stable. The office market Ho Chi Minh is performing as you would expect in a sort of a more mature market. Supply and demand issues, lack of supply, plenty of demand. We're seeing our leasing team have large number of inquiries at the moment from major companies around the world. We can't find space. So until new supply comes through, everyone's on hold. Anyone that's in Ho Chi Minh is just renewing for another year and waiting for new supply to come through before they can hopefully upsize. So we're going to see short-term rental growth for the remainder of the year, possibly early next year, and then when new supply starts coming through, we'll see a stabilisation of the rents. Residential market, so we will see another 16,000 units launched until the end of the year. 30% of that 16,000 is in the high-end sector. Now that again causes some concern. Who is the buyer? Who are buying these apartments? Are they looking to live or to invest? Now, the majority, we think, are investors and speculators in the market looking to cash in and make a quick buck. So having said that, because of the demand, we're still expecting some growth on price appreciation for the rest of the year. There are a number of new developments coming into the market, and we think that is a good thing. The market is being dominated by the local groups at the moment. You all know who they are, the Ving groups, the Novolands, and maybe 2 or 3 others, but they are really dominating the market at the moment and really want to sort of get a monopoly on the market to push the other groups out. Retail. I think retail is a real mixed bag in Ho Chi Minh. Shopping centres still, some are performing, some not. Some retailers are doing okay. A lot are struggling. F&B, entertainment, still performing well. We will see, again, I think, the groups, the developers that know how to build and manage shopping centres well will ultimately be the winners, and the ones that are building retail podiums and a mixed-use development with poor design, poor layout, and the tenant mix and quoting and cannot manage shopping centres will be, ultimately, they're going to be the losers. So I think there's going to be, maybe not over the next 6 months, but we're going to start seeing a bit of a shift on the retail scene and a shift towards more mature developers on the retail side. Takashimai, I think, is going to be a great entrance to the retail market, and I think, as I mentioned, I think it's going to sort of lift, hopefully, the standard of retail. A lot of competition from foreign retailers now, so you've probably heard about Zara and H&M Pennies, so great for the ladies in the audience that like a little bit of shopping at the weekend. Good quality retailers coming into the market, and I think that is needed because the pool of retailers, the number of retailers is actually fairly small, and again, sort of dominated by the distribution groups that hold. M&A activity, strong interest from foreign investors in Vietnam, ranging from the big private equity guys from the US, some of the European funds, a lot of the sovereign wealth funds from the Middle East, and then all the other Asian countries that we know and like and invest in Vietnam. So the Japanese, Korean, we're now seeing quite a lot of Chinese groups coming into Vietnam, Chinese market looking a little bit subdued, so a lot of the big Chinese developers looking at Vietnam at the moment and are looking at big township developments, 500 to 1,000 hectare township developments. We haven't seen any deals done yet. There's obviously political issues about doing those deals, but if and when they happen, I think that could be a bit of a game changer. And at the end of the day, Vietnamese developers are still very much dominating the market. The way that they do deals, the speed of execution, the risk that they will take on documentation, legal work, etc., and the speed of the transaction that Vietnamese developers can do, generally put them in front of the foreign groups who like to take a little bit longer and do their due diligence. So, there will be winners. This is my wrap up. Sorry, that came a bit quick. So we're going to see some winners in the market. We're going to see a few losers. So this is a first for us. England exiting the European Union twice in a week. Never been seen before. This is unprecedented stuff. But most of all, at the end of the day, we all need to find a way to get along. Thank you very much for your time. I'll now hand over to David.
Okay, thanks Steve. Really good to hear about Brexit. I'm not going to be covering that, nothing much on the legal side, but I think really good to hear the numbers and to see all the growth that is expected and all the changes as well. But for me, what I'm going to be talking about is the legal side of things. We've heard about the various different developments, but I'll take you through some of the legal developments as well, which are kind of underpinning a lot of what you see in the market today, and understanding what those changes are, how that's going to affect how the various different sectors perform moving forward from there. Okay, so I'm going to talk about these various different sectors. I think it's really easy to get carried away with residential because residential is big, right? I mean, we've got, you heard from Steve about, 16,000 new units this year. So really, what's going on in the residential sector? Are there areas of concern? What is the legal risk for developers, for buyers, things like that? And of course, then looking at commercial, service apartments, private residences. And the one area that I think is often neglected from a legal perspective, retail and F&B. How difficult it is to actually set up a retail business, to run an F&B business, as a few of you in the audience today, so you'll be able to sympathize with some of these challenges that the players in these various sectors are facing. Okay, so we have to start with residential because that's where all the action is, right? So a picture that one of my colleagues put together, you see the differences. I just met someone this morning who started coming to Vietnam in the late 90s and 2016. So he's seen all the changes. I only arrived in 2003, but again, you see how things have changed. Yeah, it's all high-rise and no longer kind of like the 3-4 story residential developments from before. But okay, just a few points to be mindful of. I think most of you already know a lot about residential, but I just want to remind us about these few points as we think of residential. Firstly, no restrictions on foreign shareholding. So most of you who are foreign investors here, you already do projects on a wholly foreign basis. It's completely open. Whenever I talk to people on a regional basis and I say, look, in Vietnam, there are no restrictions. In Vietnam, you can own land. People are generally quite shocked that that is the case. So we're actually quite lucky that in Vietnam that is the case, and it's well documented and it's completely open to foreign investors. The one thing that's changed in land ownership, I want to highlight because I think a lot of people forget about this, is that now for residential, if you're a foreign investor, you get allocated land. Yeah? If you're going to sell residential property, you've got to make sure that your land is allocated land. In the past, it was leased land. Alright, so that has changed. So please keep an eye out on that. You need to have allocated land if you're going to sell. If you don't have allocated land, you're not going to be able to sell. Alright, so keep that in mind. The next thing that we need to remember is development purposes only. So I get a lot of people come and say, look, I want to do land banking because in Malaysia that's what I do, in Singapore that's what I do. I get some pieces of land, I'll keep it for a while, and then I will develop it later. In Vietnam, you cannot do that if you're a foreign investor. So bear that in mind. You have to develop. Part of the process to acquire land is that you must get approval for your project. So it's very, very difficult to do land banking. So how do you do it? If you want to do land banking, what you need to do is you need to partner with a Vietnamese company that can hold land for a longer period of time. So there are ways to get around it, but you've got to find a good Vietnamese partner to help you with that. Okay, so 3 things I want to highlight about prohibitions that you really need to be careful about. For foreign investors, again, it's related to development purposes. You cannot trade property, you cannot trade land. As a foreign buyer or a foreign investor, you cannot buy land and you cannot buy property for the purpose of buying and selling. Okay, that's not actually permitted. So don't get caught up in that. The other thing that foreign developers cannot do is subdivide land for sale, land lots. Okay, the Vietnamese developers can do that, foreign developers cannot do that. And the third one is this practice of authorizing other parties to sign contracts. It is now clearly prohibited under the new law. I think a lot of people don't realize that because they still do it. I still see the practice in the market, so just be a little bit careful about that because it's now clearly highlighted as something that is prohibited. So try to avoid that if you can. Okay, this is just a reminder. You know this already. Those of you in the room, you have to increase your capital to 20 billion. If you haven't done it, you have exactly 24 hours to do it. So I'm sure you've already done it. I'm sure you're on top of it. But remember that that is happening July 2016. Okay, so those of you who are still not very sure about that, go and check with your corporate secretarial guy and say, look, can you just confirm to me that it is now 20 billion? Because David says I'm going to be in trouble, and you will be in a little bit of trouble if you haven't done that yet. Another thing that's happening on the property management side on residential is that companies providing management services now have to be registered with an agency if they're providing those services. So those of you who are developers of residential property, if you're looking for a property manager, please check that they are registered. If you are providing those services, please check that you are registered before you offer those services to residential building owners. Okay, this is new, and again, I think it's one of those things that is quite easily overlooked by a lot of us who have been around for a while. Okay, so let's move on to this topic, pre-sales. I think everybody in residential is obsessed with pre-sales right now for obvious reasons. We want to get as much money as possible, right? So the question is, and of course you go out to market today, you see that there are a lot of people who have many different practices about pre-sales. And there is a lot of misinformation out there, and there's a lot of confusion. So I'll just quickly take you through it. We can take more questions later, but this is pretty much what the requirements are if you look up there. So what are the conditions for doing pre-sale? Number 1, you have to have the land use right certificate if you're a developer. Number 2, you have to get all your drawings, all approved, and then you have to have your construction permit obtained already as a condition. The next thing that you need to be careful about is technical infrastructure. This is new. So under the old law, you did not have to have all your technical infrastructure done, but now you have to make sure that your technical infrastructure is done according to the project schedule before you can do the pre-sales. In the past, you remember that it was just foundation works. Now it's technical infrastructure, and also make sure that your foundations are complete. Okay? The foundation condition does not apply to villas. So that's good. So if you've done your technical infrastructure, you don't have to have your foundation works completed to sell villas. So that's the one thing that's different from the old law, and I think it's great. I mean, it makes a lot of sense for the villa. So you remember that under the old laws, there were not a lot of provisions related to landed and villa development. So this is something that's changed. I think it's very reasonable, and it's a good change, really. Then the next thing that you have to do as a developer is you have to submit a notice to the Department of Construction confirming to them that all the conditions have been complied with, and then you get an approval within 15 days from the Department of Construction. The next thing that's new, and you all know this already, is bank guarantees. There are a list of 40-something banks who can give this bank guarantee. If a developer, if you're buying an apartment unit and the bank guarantee is provided by a bank or some other institution which is not on that list, you need to tell the developer, hey, you've got to go do this. You know, you're not following the rules relating to the bank guarantees, and it will be a problem later. Then once all of that's done, you can sign the sale and purchase agreement. Okay, you do not sign a sale and purchase agreement before any of these conditions are met. And again, this is something that, you know, practices out there are different by different developers. So keep an eye out, and if you are aware of these conditions and your rights, then you can protect your interests as well. And then after you sign the sale and purchase agreement, then you pay the advance payments. Do not make a payment before you sign the sale and purchase agreement. That will not end well. Okay, so make sure the sale and purchase agreement is signed first, and then you can make your payments after that. Okay, so what has changed? The conditions that have been removed from sale and purchase. Firstly, no more trading floors. Great, isn't it? I mean, most of us never really understood how the trading floors worked or why they were there. So that requirement has been removed. We worked with the government. We told them, look, we really don't use this. It's not being used in the way that we want it to be used. So it has been removed. And then I talked about the villas, where it's just about the infrastructure. So no more foundation requirement. Okay, additional conditions, I mentioned already, technical infrastructure, and then the last one that I think people also overlook is the land use right certificate. Under the law before, you didn't have to have land use right certificates. I knew of a few projects where people were selling property and the land use right certificates had not been issued yet. So now it's very clear that you have to have the land use rights certificate. And this is the payment schedule. So again, a lot of confusion about this. The main thing to remember is the first installment is only 30%. Okay, so developers don't collect more than 30%. You're actually not supposed to do that. So it's only 30%. And the thing that's different, as you'll see there, 50% and 70%. So domestic developers can collect up to 70%, and foreign developers up to 50% only. And another new thing, the 95% requirement. Under the old law, there was no restriction. You could collect up to 100% and hand over. It's now 95%. And the remainder of the 5% can only be collected when the land use right certificates have been issued for the property. Okay? So that's a quick rundown of what the schedule is like. From 30 to 50 and 30 to 70 is according to the construction progress. So what that means is you cannot collect 30% on Monday and then on Friday collect 70%. That's not right as well. Okay? So that's how the schedule works. So that's pretty much all I'm going to talk about residential. I'm not going to go through the rights of foreigners to buy. We did that the last time around, and I can take questions later. But I want to quickly move on to other things. Commercial, that's my office building. Sorry, not mine. I don't own it. Ryan owns it, but we're in that building. So commercial has obviously changed dramatically over the years, and of course, there's going to be a lot more interesting offerings in the market as well. One thing I want to talk about commercial is that I think it's really important for us to understand what commercial is. Commercial is essentially all of these things that you see on the slide, right? It's just anything that is not residential, okay? There's a big confusion in terms of commercial when it comes to service apartments because people think it's residential, but the reality is that it's not. It's actually commercial, right? So hotels, branded residences, service apartments, offices, retail, that's all under commercial use as well. If a building has residential use, the whole building is treated as residential for the rules and regulations. Okay, so the procedures relating to residential will apply to that particular building. Okay, so some goodies in the new law. You can now do pre-leases. You heard Stephen talk about how there is now a big uptake on pre-leases, and legally, part of the reason for that is because under the old law, you were not permitted to do pre-leases. You could not sign a lease for a building that had not been completed. So what you do is you sign a commitment or something of that sort. Now you can sign a proper lease agreement for office space that has not been completed yet. Okay, and it will be protected by the law. So that is something that I think is a great development from the legal perspective because it was already happening. So the legislation is now clearly recognizing this practice and in a way legalizing what's being done in that regard. But again, remember that as the same for pre-sales, there are conditions for pre-lease as well. You have to have the land use right certificate, approved drawings, and you have to have the construction permit and the technical infrastructure in accordance with the schedule and the foundation completed. So what does that look like? The residential conditions, right, for pre-lease as well. The other thing on the commercial side for foreign developers, you know that you can do lease for sublease now, whereas in the past you were not allowed to do that. And you can actually buy completed buildings as well. So if you're a foreign business owner, you're operating in Vietnam, you don't have an office building, you want to buy one, you don't want to build one, you can now do that under the new laws. So quite a lot of good changes in the laws favoring foreign investors, foreign developers. I think the market's completely opening up. It was already quite open before, but it's getting more and more open to foreign investors and foreign developers in general. Hotels. We heard the numbers. So many tourists coming to Vietnam. We've worked on a few transactions for hotel acquisitions. We have so many queries on hotel acquisitions. Everybody wants to buy an operating hotel. They're looking at the returns, they're looking at the yield. There is a lot of interest, and that's supported by the fact that there are so many tourists, and it's one sector which continues to grow. The one thing about hotels, I think, to be mindful of is the way that hotels are being done now. You have the resorts, which are hotels, and then you have residences as well, right? So when you're looking at that from a legal perspective, it's really important to understand how residences in a hotel development relate to the actual hotel operations itself. Again, whether it's residential use or commercial use, if it's service apartments, then it will be commercial use and not residential. Okay, on the law side, visa waivers. I think that was one of the things that drove the tourism industry. You see those waivers on the list there. We've got the last column there, which is until supposed to expire in June 2016, but now the talks are it's going to be extended, which is great. I mean, we want people to come to Vietnam. We want it to be easy to come to Vietnam. Another thing that's happening is on the AEC, the ASEAN Economic Community, there's a lot of talk about tourism and how they will introduce measures, to make it easy for people to travel around ASEAN. Recently, you saw the talks about ASEAN visa. So someone coming to Cambodia will be able to come to Vietnam, for instance, on the same visa. So there's a lot of things happening on a regional basis on the tourism side, which explains, I think, why there's so much interest and so much activity on the hospitality side. We'll talk more about that in the panel with Olivier, who is a world-famous hotelier. But we'll get more insights from him afterwards. My colleague found some interesting pictures. I don't know when is the day when we'll have a lion next door to our hotel room. I don't know, maybe Olivier will do that in your next. Olivier says soon. So you can ask him afterwards, but look at these. I mean, these are some of the concepts that are going on in the market today, and I'm wondering, when is that going to happen in Vietnam? I don't know if the Vietnamese market is ready to live in a tent yet when you go on holiday, but maybe if it's, it's glamping, right? Where it's glamorous and you've got air conditioning and everything. I don't know if it's camping anymore. Look at that. Fancy living in an aquarium. Yeah, so some of the concepts which are out there. The only thing I'm kind of struggling a little bit about is the legal aspects of living underwater. I'm really not sure how to deal with that legally, so maybe someone will decide to do a project like that, and we can work through all the legal stuff. That would be interesting. Again, so sorry, that was the hospitality pictures. Okay, let's go on to retail. I'm just mindful about time. I think retail obviously is again another area that's really exciting. We had the Big C sale, we had the Metro sale, and I think if you look at the M&A transactions in the last couple of years, these feature very, very highly because the volume is huge. And of course, everyone that we see today who's an investor in Vietnam who likes real estate is going, I need exposure to consumer. Retail looks great, domestic demand is on the up, GDP is expected to grow, people are going to have to want to spend money, right? So it's a lifestyle thing. It's the where they're going to spend money. They want to go to Zara, H&M, so retail is pretty exciting. But obviously you've also read the newspapers about the concerns about retail, the concerns about how the domestic retailers are being squeezed out by the foreign retailers. I read an article recently where they said there's a huge concern that the entire Vietnamese retail market is now dominated by Thai retailers. It's not true, but I mean there's a general sense, I think, from a policy level and on the ground that there is a lot of activity by foreign retailers. And I even read, reported in one of the newspapers that there is a kind of a tendency to want to limit the expansion of foreign retailers. I'm not sure that's a good thing, but just to put it out there that we need to be aware that the undercurrents of these things, the general sentiments about retail right now are not really in favor of foreign retailers. So I think that's something that we want to be mindful of. But the question is, how will they be restricted from growing? And one very powerful tool to restrict the growth of foreign retailers is the legal conditions. Unfortunately, in Vietnam, foreign retailers are treated very differently from domestic retailers. On the residential development side, on the commercial development side, like I said to you, there are no restrictions, right? But for retail, if you're a foreign retailer, that is the dreaded ENT, which is the Economics Needs Test. I'll talk about that shortly. But again, this slide here are the legal procedures for setting up a retail company. So you see all the different steps, the things you have to go through. I think you go to MOIT twice, and then you have to get approval from the local authorities. You submit an application, you get the DPI to approve, the MOIT to approve, the PC to approve. Basically, everybody under the sun has to approve it, and they will ask you 20, 30, 40 questions before they approve it. So it's a long, long process. That number of days there is very misleading. Nothing ever happens according to those number of days for retail, in my experience. Okay, it will typically be much, much longer. Right? So it's a painful process for foreign retailers in general. So those of you building those retail podiums in mixed-use developments, this is something you have to keep in mind. We recently worked with a foreign retailer wanting to bring a brand that is a new entrant in Vietnam. It's not here before. It's a great brand. I know about it. Even I know about it. So it's a pretty good brand. It's not Zara or H&M, but something like that. And they wanted, obviously they have, for all businesses, you've got a certain period of time when you need to get things done and then you need to launch, right? Because you have to make some money. But because this process is so unpredictable, it was very difficult for that retailer. So they had to change their strategy over time to match what was going on in terms of the licensing. So, just to illustrate that, that is a challenge. And I think for that, we really need the support of the retail owner, the building owners. Everybody needs to work together to get the foreign retailers properly licensed to do so. One thing to clarify, and again, sometimes a little bit misleading, Owners and developers of retail space don't have this issue. They are just developers. These issues related to licensing are only for the retailers, the foreign retailers. So the foreign companies who are operating Zara in Vietnam, for instance, they will be subject to this, but not the owners of the retail space. Okay, two things to be mindful of. One is for the first retail outlet that a foreign retailer has, you go through the process of the licensing and then you're done. That what will happen is something called location examination. So this is the one that you see on the slide, where they look at the master plans, determine that the location is suitable for retail. That's the first one. And then I mentioned the Dreaded Economics Needs Test. That's what you see at the second half of the slide. That's the one where it's a little bit painful and there's a lot of discretion. So basically the authorities will look at number of retail outlets, market stability, population density, traffic, these kind of things, to decide whether the foreign retailer is allowed to open a second retail outlet. So again, that's a difficult process. The good news is exemptions were introduced. The exceptions are if your retail space is less than 500 square meters, if it has been included in the provincial master plan for trading and the construction of the infrastructure is complete. Okay, so if you satisfy these conditions, then you do not need to go through the ENT. So really, the only ones that are very badly affected by the ENT continue to be the large operators, departmental stores, hypermarkets, those people are the ones, supermarkets will continue to be affected. And the good news is there are examples of foreign retailers who have passed ENT tests already. So it's not all bleak, it's getting better, but just to be aware that there are hurdles for foreign retailers. This is my last sector, just being a bit mindful about time, F&B. F&B again is exciting because if you look at retail today, it's all about lifestyle, right? It's no longer about just brick and mortar retailers. You've got to have entertainment, you've got to have leisure, and F&B is a very, very big part of that. I mean, I think all of us here, we love food, we love to have access, we want to be able to go somewhere, eat, watch a movie, go shopping, and just find everything in one place. So F&B is huge. I think it's growing very, very rapidly. The good thing is, in 2015, for the first time, foreign ownership of F&B outlets was permitted. Okay? Before that, what you had to do was, you were only allowed to own the F&B outlet if you were part of a hotel development. And if not, then no. So what was very good, but you're thinking, oh no, but I know a foreign-owned restaurant in District 1 or in District 2, so they've been operating for a while. So legally what they would have been doing is they would have been working through a Vietnamese partner of some sort. Okay, so that was not allowed before, but now it is allowed under the new law. So again, this is an area that we get a lot of inquiries on. There's a lot of interest in F&B, and the challenge for F&B really is about the structure. Because it's only been 1 year since the laws have changed. So a lot of the big F&B businesses right now structurally are still need to be consolidated. Yeah. So I think a lot of F&B is going through that process right now. The other thing about F&B is if you're thinking of setting up an F&B business, there's a lot of minor, mini licenses. And if you're going to sell alcohol, that's going to be a challenge, making sure that you get the licenses. You have to make applications for the licenses. There's a lot of mini licenses, health and food safety, environmental protection commitments, compliance on recruitment, advertising, store signage. One of our clients, which is a big F&B operator, at the very beginning of their business, they were harassed all the time. Someone would always come to them and say, your sign that you put up, it's a problem. And they'll be like, but we have the approval. We submitted it to the Ministry of Information and Culture and they said that it's fine, right? And they'll be like, yeah, but it's placed outside the door. It's like 1 cm outside the door, but it's our open area. So there were all these issues about minor licenses and compliance which we see affect F&B businesses quite regularly. So that's something that if you're operating F&B business, that you should be mindful of. Okay, so this is the last thing I'm going to talk about. We'll go into the panel. I wanted to quickly talk about, we talked about all the different segments, but the reality is today, real estate development is no longer about just residential, one commercial building, or just retail. I mean, you see it now all the time. You see all the mixed components. You see a project where you have a hotel, you have the residences. We talked about the Kumho ASEAN project. That's a good example. They have service apartments. They have an office building. There's a commercial component that is retail. And then there's F&B, things like that, right? So this chart quite clearly shows what a lot of these buildings are like today. So what I wanted to quickly end with is, from the legal perspective, when you're thinking of developing a project that has all these different components, there are a few very important things that you have to think about. In terms of your project, assuming that if you're doing a mixed-use development, there will be, it will be a sizable project. You can't do a mixed-use development on perhaps like 2,000 square meters, right? I mean, you need a big project and you are adding all the different components. There's a few legal issues to be aware of. The first one is the residential use. We haven't seen a lot of this in the market today because it's very rare to get residential use for a mixed-use development in the city center. But if you do a project where there's residential use and you can sell, you have to be very, very careful about how you do your licensing and you get your approvals, because when you sell apartments for residential, you have to subdivide the land use right. Okay? So then the question is ownership. So ownership transfers to the owners, and then do you still remain as the owner of the rest of the building? So that's a very critical issue. We have not seen a lot of that happen yet, but I think we'll see more and more of those issues in the future. The other thing that you have to think about is your exit strategy. If you're a developer and you're building something that has various different components, when you think of exiting, are you thinking of selling different components? Are you going to sell the commercial component? Are you going to sell the retail podium? Are you going to sell the service apartments? Are you going to sell the hotel? And if you want to have those options, you have to make sure that from the very beginning, you do the licensing that allows you to do that. It's related to the land use rights certificate as well, because you have one land use rights certificate for the whole site, but you want to transfer title to the building and the land. So you've got to figure out how you split that out so that you have maximum flexibility when you decide to do so. We worked on a project which had multiple towers, and one of the towers was commercial and the rest was residential. But not all the residential was sold. And then there was an interested buyer who didn't want to buy residential. They were only interested in commercial. So there was a very, very long discussion about how to give the commercial component owner all the rights that they needed. Some of the rights that people will be thinking about up here, this is just for your information: common facilities, rights of access. We had a case where someone was operating a restaurant on the ground floor, and it was raining like it does now in the rainy season. And the owner of the restaurant said that they didn't want the tenants coming through their restaurant to go into the apartment building because it was messing up the whole place. It was, and it was just used as an access. So the question is, do they have a right to do so? And if I were living in the apartment, do I have a right to go through the restaurant to get to my apartment if it's the most convenient way for me to get there? So things like that, are important. Lifts. Can I use people who are coming to the commercial part, are we sharing the same lift with the residents in the apartment? Is there a security issue? Is there a safety issue? Things like that. The way that we deal with it in Vietnam is through contracts. You have to have really, really good contracts that bind everybody, and everybody agrees on the rules about how they use things, how maintenance cost is allocated, who pays for insurance, things like that. So this is just a brief introduction, but there are quite a lot of things that you need to think about. So when you are considering that kind of development, give some time and some thoughts to these issues. Okay, so that's a brief snapshot, I hope, of the many different things and how they relate to each other. Thank you for listening. I think we move to the panel discussion now. Yeah. Okay. Thank you. Thank you very much.
So thank you very much to, so we've got John Lin here. John has joined us from BSIP. I'm sure you're all aware of BSIP and their importance in the market in Vietnam. So John, currently working as head of commercial and residential for BSIP. He oversees the real estate investment transaction side for the commercial and residential of the BSIP portfolio. So a lot of responsibility on John's shoulders. John has more than 20 years experience in the real estate and investment business development business. Worked for 10 years in Shanghai and approximately 9 years in Vietnam. Previously with Vina Capital and Eastspring and Semport respectively. So very warm welcome to John and thank you for coming to our panel. And to my left I have Olivier. Olivier is half Vietnamese and half Luxembourgish. Is that correct? Very correct. I've never met anyone, well, I've obviously met you, but I don't know anyone else that's half Vietnamese and half Luxembourgish. Prior to co-founding Dynasty Investments in 2007, Olivier spent 14 years with JP Morgan in its investment bank, emerging markets and wealth management divisions, initially based in Europe and since the mid-90s in different countries in Asia. Olivier has been involved with various hospitality, real estate development and private equity investments in Vietnam, ranging from luxury boutiques hotels, very nice hotel indeed, real estate development and private equity investments in Vietnam. So both John and Olivier are highly experienced guys in the Vietnamese market and really looking forward to having a panel discussion with you both. So starting off, maybe with John, if I can come to you first. Maybe you can just give us a brief overview of BSIP and your current business activities in Vietnam.
Hello. Yeah, thanks, Morning. Let me just give you a quick introduction of BSIP. BSIP is the master developer of integrated township and industrial park. We started 20 years ago with the support of two government of Vietnam and Singapore. We started with one integrated township in Vietnam. Now we have 7. Hai Phong, Bắc Ninh, Hai Sinh, Nghệ An, Quang Ngai, and of course in Vietnam. Today we have attracted more than $6 billion of foreign investment, private investment in this township. More than $8 billion of export value. We have grown from 500 hectares of land to today more than 6,700 hectares of land. Of this land, 70% is industrial park, 30% is what we call C&R, which is commercial and residential. So BSIP is not just industrial park players. Actually, we are master developers of integrated township. Our company, what we have been doing and what we will be doing is we will always establish long-term sustainability in Vietnam. So we take a very long-term perspective of our investment and our business, and we want to be sustainable in not only in our business but also in our infrastructure, environment, and so on. So this is basically what we do. Our core competence and our expertise is mainly in urbanization and industrialization. So this is essentially what it is.
Great. Thanks, John. I think that gives a good overview. So total portfolio, I believe, is in excess of about 6,000 hectares. The interesting part of one of the reasons that we are willing to discuss with you today is understanding about BSIP and maybe the future strategy and where you're seeing the industrial parks going. So from my understanding, the industrial parks, some of the industrial parks are now very of becoming quite mature, 100% fully occupied, and now it's moving into the next phase of that development, is where you're looking to create the commercial and residential component of the park to make it more sustainable to township development. Maybe you could just give me some views on your future strategy.
As I said, our future strategy is really to create long-term sustainability in our business, in our investment. We believe in providing good value-added deal, right? What I'm trying to say is we will not be the most expensive integrated township land seller, so-called, but we will not be the cheapest. What we believe is to provide good value-added deals. What we also believe is for the township, we want to provide a place, a platform for people to be able to work and live there. Now, we are just not operating industrial park alone. So this is what we are moving ahead. That is why if you see our township, besides industrial parks, there's always 20 to 30% of our infrastructure, our land for C&R. So as a master developer, we work with investors to develop currently mainly middle class product, whether is it residential, rental properties, retail, service apartment or hotel. So this is what we want to make our industrial park, or rather our integrated township, more complete with social infrastructure, with amenities, with services, and more sustainable in the future. So this is what we're going to do over the next few years.
Right, thanks, John. I think that I'm going to ask this question to both of you for various different reasons, and as from both of your point of view, can you give us a reason why you are investing in Vietnam and why Vietnam is an attractive destination?
Well, actually, there's only one reason. We believe in growth potential in Vietnam. Right? We've been here for 20 years, and we will be here for a long time more to come. So we believe in the growth potential of Vietnam, not only because the population, but because I think the fundamental, although ups and downs, in the long run is good. Not only that, I think Vietnam government also provide a good environment, good policy for foreign investors, especially in our line of business. If you look at the FDI so far, as per your statistics, I think more than 70% are into manufacturing. So we believe that Vietnam is a good manufacturing base, not only for big domestic market in Vietnam, but also Vietnamese government is trying to link up to the market outside, whether to Europe. Because it is manufacturing driven, so that's for our commercial and residential properties will actually benefit from that, not only for that township, but also for the city where we are investing in. We provide service, we meet the demand of this, not only the township, but also the city. So I believe, we believe in Vietnam and we are going long term. We believe by going long term, we will be successful.
Right, thanks, John. Maybe over to Olivier. Quick overview of your business sort of strategy and current activities, and then why you believe Vietnam is the right place to invest in.
So maybe I'll start with the second question. Similar to John, we're very macro and fundamental based, so we believe in the long-term prospects of Vietnam. I arrived here almost 10 years ago. Time flies. The picture hasn't changed, it has improved actually. We've weathered a pretty hard down cycle, but I think government reforms has been helpful, although not as fast as we maybe hoped. I think it was faster than what we would have bet back 10 years ago. So it's been overall positive and conducive to foreign investment and economic development. I think we're seeing obviously just fresh off the press, the slowdown in GDP. I wouldn't be too concerned. We can be like other countries where we of course hit the GDP figure magically every year, or we have real GDP growth spurred by still manufacturing. Actually, if you look below the statistic, manufacturing is still doing very well. GDP growth in the south with FDI. So I think that's real growth that we're seeing in the economy, sort of going through the whole system. Of course, the services, especially real estate, is up, but we know that that can be a bubble boom. So we'll see how that does. For us, we started back 10 years ago as a small thematic specialized fund, and we've tried to stick with that. So I actually visited the SIP almost 8 years ago. Loved what you do, but we're not going to be better than you guys at doing that. So we believe you should focus on that. What we're focusing on is mostly hospitality. We actually disposed of an asset we redeveloped in 2009, end of last year, and we're working on the development of quite a large beachfront in Ho Chi Minh, about 2 hours away from Ho Chi Minh City. Hopefully bringing a new concept to Vietnam, a new brand. We're still looking in Ho Chi Minh City as well. We believe there's still a lot of opportunities. Again, tourism numbers, you have to look below the statistic. And actually you had it on your chart, it's a lot of Chinese, it's a lot of Russians. The high-end markets, Australia, Europe, UK, is going to be challenged this year. So we're more bullish on limited service brands than very high-end. I think there's a lot of new and better products coming in the high-end. And with line prices, it's going to be quite challenging, unless you have a very long-term view. So we like limited services for inner city locations and resorts in areas like Ho Chi Minh that are up and coming. And very recently, in February, we closed a new Luxembourg fund solely focused on residential affordable housing. And by affordable, we mean apartments between $600 and $1,000 per square meter. So, everybody has a definition of affordable. It's a fund that can only do affordable, so we're not touching the luxury market or even the higher end. Similarly to what you were saying, I think, John, we believe the middle class is rising, urban middle class, people moving to the cities, sector. We're following also the industrial parks, are very important, so a lot of our first projects are in District 9 because of infrastructure and because of the proximity of the industrial parks in Binh Duong, in Nhân Trạch, and in Dong Nai, and of course the Saigon IT park. So it's very similar to your themes, but we're looking at developing something very specialized and bringing basically $50,000 to $75,000 units to the market of good, affordable quality.
Vivier, I think really interesting to hear about affordable, because I think that's the one area where it is a recent development. It's not been there maybe like 5, 7, 6, 7 years ago. And the other thing that would appear is that the foreign investors not really very active in that area. And one of the things that consistently we hear from foreign investors who are interested in affordable is that how can you make it affordable when it's so expensive? Land cost is so expensive, construction is so expensive, materials are expensive. How can you make it affordable? How can you make it at a price where it's still affordable to the average buyer? How do you deal with these kind of challenges when you're looking at your product?
Yeah, that's a very good question. So all of that is true. Obviously, the recent sort of boom in real estate has put some pressure on contractors to build the buildings. I think we're seeing again what I would call a bubble in land prices in certain areas, with landlords having, in my view, unrealistic expectations in terms of the land values. I mean, we hear that some parts of District 9 land has doubled. I mean, how can that be in 6 to 12 months? There's no economic fundamental there. We haven't doubled the selling prices or even increased by 40%. So it is very challenging. It is a very local market. Most of our competitors are local firms. I think as foreign developers, it's very difficult because of the overhead and just the cost of delivering the product, which is why we're a very small team. I mean, my partner Oliver is in the room, and we're very hands-on. So most of the time you see us in jeans and t-shirts on construction sites or acquiring land. We are, of course, the obvious question is, how do you compete against the local groups? So we heard from Stephen, the luxury market is largely dominated by the local groups. They have better access to land, to financing, to government processes. So we try to focus on quality and what we can do better, on marketing, and really delivering a product we believe will be different in the market. And we deal also with all the other issues very much by being hands-on locally. So affordable housing it's more about manufacturing than real estate. It's really a volume game, and once you sort of get to that, putting that system in place, it's delivering the unit. And I think if I read your chart correctly, there's about 10,000 or 15,000 units coming on for the next 3 years. The demand is 3-5 times that. So we're still in a market where demand vastly outstrips supply, which I think is different from some of the other sectors in residential.
I think that's right. I think that's our overall view that affordable sector is more immune to the cycles. There is genuine demand, and we know that there is a considerable undersupply of decent quality affordable housing available in the market. So I think as a play, as a developer getting into that space, and also in terms of what John is doing with the integrated townships, there's a lot of requirements now for the more established parks that you have, where you need affordable housing to cater for all the people that are working in the townships.
Well, actually, interestingly, a lot of that category developers and investors are talking to us. Well, the comment that I was told is that they need bigger land because of volume. So in key cities like Ho Chi Minh and Hanoi, they can't find big size land for the kind of price to make the affordable housing affordable and therefore the money. So they come to VSIP, where our township, although it's not in Gateway City, but it's just next to it, whether it's in Viên or Bắc Viên, right? They even Hai Phong is the third largest city in Vietnam. But what they are looking for is good value of land, not super high end. And there is catchment of demand, whether it's in industrial park and that city, and because it's just next to, say, Ho Chi Minh or Hanoi. And so the travel distance is not so exorbitantly high. So interestingly, over the past few months, there are a lot of this category of people who come to our township, who look at these categories, which they initially never come because they've been looking for gateway cities like Ho Chi Minh and Hanoi, but as I was told, they couldn't find the kind of value, big size land for that kind of product. So I just want to let you know that interestingly, a lot of this interest is coming from our township for that categories of projects.
So can you accept this as a formal introduction for, I think we've just managed to do a deal there, very subtly.
I hope so, but what I'm trying to share with you is really the middle class housing is really in demand. But when you get property with a kind of price, they can make developer, although you want to go for boiler, but you still have to earn money. Now, typically for, say, apartments, the land price is like, I don't know, 15% already, right? Construction costs, yes, you can go for the best technology in the world, but is there about? Yes, of course, the overhead foreigner are more expensive and this and that, but you spread it out because of volume gain, you spread your overhead. But primarily, the land cost is a key component, I must say, whether it's rental properties or whether it's mid-high rise. But when you get all these things, right, I'm not saying that we are the only one. I'm saying that developers are looking at now away from city center or maybe even slightly away from gateway cities to surroundings. I think that's what I'm trying to say. But we are in the integrated township business. That's where I think contribute to the future development of real estate in that categories. I think we can play a key role. I think we have the size, we have the catchment market, not only in the city but also in the township. So increasingly, a lot of developers are coming to us to talk about that categories.
Sorry, I think that it's very clear that there is a lot of demand for that kind of product, and of course there's a lack of supply. But I think also there's a lot of people who are out there saying that they're doing affordable, but are they really affordable? I don't know, Olivier, can you tell us what you think are the characteristics of an affordable product in terms of cost, in terms of what's being put out there, and also maybe can you talk about maybe the affordable subsector in itself? I mean, what's going on? Is there a lot coming into the market? What's the competition like? A little bit about that.
Okay. Thank you for the question. So as I said, affordable, everyone has very often when we tell people affordable, they think social housing. And we always make it very clear we're not social housing or resettlements, and I'm not going to go into why we're not doing that, but I think it's quite obvious. So we're sort of just above social housing. Let's say that's where we start, where it's private market, private buyers, not driven by government help or regulations. And I think the limit that we set to ourselves in terms of pricing, because again we wanted to be very focused and very committed to investors, so we said, for the lifetime of our fund, so over the next 5-6 years, we won't go beyond a price of $1,200. So that's our definition. I think there's a lot of different definitions in the market. Our first projects in District 9 will be, I'm not going to give a price today, but will be below the $1,000 mark. I think some people are launching it higher than that and call it affordable, and you'll still see very, very local developments at prices which are very, very low, 15, 14, 13 million, depending on the areas. Land, of course, is a very big component. As you said, there's only so much you can do with construction, even if you use BIM or the best technology or precast. So we're very disciplined on land acquisition. So we're not going to do anything in District 2, definitely not District 1. District 9 is starting to be expensive, where we were just at the second ring road. We're starting to go out towards more the east. We looked at TÜDük, but also are moving towards you, so maybe we'll join there very soon. We're just at the highway now, between Binzung and TÜDük, so we're being pushed out of the CBD, but that's fine, because again we follow infrastructure and general economic development where our buyers will be. And really our sort of perfect buyer is maybe a couple where the wife works in a bank, maybe she works in District 1 and she'll work in 2 team in the future, and the husband maybe works in one of the industrial parks. So they definitely want to live in District 9, because that's sort of in between, they have good infrastructure, etc., and they want to live a bit of a more modern lifestyle. So that to us is affordable, and it really goes to looking at what people can pay on their mortgages. Most of the real buyers that we foresee will be people who earn salaries, dual income, maybe $1,500 a month, and who can put $300, $400 of that to a mortgage repayment. So you do the maths, and it's very easy to figure out that they can't afford a $250,000 apartment. They're going to afford something between $75,000 and $100,000 at the most. And I think that formula, if you look, and I'm sure Stephen can bring some light there from JLL, that if you look across the world, whether it's in India or Indonesia or anywhere else, in a normal sort of stable market, you always have an affordability ratio. And I think it's important to follow that. Yes, there is a market of speculators, of very wealthy people who buy $250,000, $500,000, $1 million homes, but that's a very, very narrow market in our view. So we like to focus on the sort of the fat end of the pyramid in terms of incomes.
I think that's, all great points, and I think we've certainly agreed to most of those at JLL. Just as a final question, just to change the tack slightly, just in terms of the pickup on the hospitality side of what we're doing in Ho Tram. We've got, I think Gary's in the audience somewhere from the Grand in the Ho Tram, who's currently with us today, and I've spent quite a lot of time with Gary over the last few weeks and talking about all their plans for the grand at Ho Tram and how they envisage Ho Tram growing and becoming the next sort of destination for tourists and for visitors from Ho Chi Minh. It seems, on paper, it seems like an obvious. It's an hour and a half, 2-hour drive from Ho Chi Minh. For anyone living and working in Ho Chi Minh to escape to the weekend for a weekend retreat, it seems like an obvious no-brainer. Maybe you can give us a little bit more insight into Ho Tram and what you're doing there.
Sure. Yeah. So we got involved with Ho Tram. I think it was early 2008. I think the casino wasn't even announced. We bought our first piece of property there and assembled a few sites adjacent to each other on the main beach. And we always felt that it was the closest, nicest beach to Ho Chi Minh City, except for Tรึ่but Tรึ่was already polluted, populated, and sort of badly developed as a local resort. So we felt it was the closest undeveloped and pristine beach for Ho Chi Minh City. It used to take 4.5 to 5 hours, and it was a rough trip on a day in those days. So obviously today everybody recognizes it's very close. When the new airport will happen in long time, it's going to be even closer. We believe in airlift. If you look at resort and hospitality development in the region, airlift is very important. So Longtan Airport, I think, has the ambition to become not only a domestic hub, but a regional hub, and that's going to be very important. And if you have to take another flight to go to another resort destination, that's just a lot of other people that are not going to go. Yeah. So Hoi An, even though Hoi An is great, but it's going to be limited by airlift, Phu Quoc, etc., etc. And I think from a climate point of view, I'm sure Gary will confirm, but Ho Tram happens to have actually a very good climate in terms of rainfall. So that's also an advantage. It's about half of Phuket, so it hasn't stopped Phuket from growing, but it's a big advantage for the location. We believe the more the merrier. So we're very happy for every new project announced, every additional phase that ACDL is doing is helpful. I think the Gulf has put the location on the map. Singapore Group has launched a relatively large product called the Hamptons recently, and we're hoping to bring the leading integrated resort operator in the world to do their first resort in Vietnam there. They've been trying for 20 years. They've looked at different locations in Vietnam, and they finally signed with us to do the first resort in Ho Tram. So we're very excited about that.
Congratulations on the deal. Can you let us know who it is? Tom?
Sure, I think it's everybody knows already, but it's a Club Med.
Excellent. Well, thank you very much to John and to Olivier for giving their insight. I mean, just a quick wrap up. From the key takeaways that I get from both the comments from John and Olivier, yes, and questions. I was going to miss out the question. So I know someone's going to ask about boom and bubble. So maybe we'll open up to the floor if anyone has any questions. Hopefully there's a microphone in the room. Any questions out there? This could be fantastic. Oh, we're going to escape the dreaded question. Yeah, Brian. I'm good, Brian. Maybe, actually, what I'll do first is, can we have a quick show of hands? Who thinks we're in a boom? First of all, and then I'm going to have a show of hands who thinks we're in a bubble. So boom first of all. Can I have a quick show of hands? Ooh, not that many. Only 4 or 5. And bubble?
Actually, may I a private message for my landlord in the room? Andy, don't listen to what Stephen was saying about office. But being half Luxembourg, so for those who don't know, Luxembourg is close to France. Yeah, so let's say being half French, And half Vietnamese, there's nothing not to like with bubbles. Real estate, champagne. So we love bubbles. It's just a hangover sometimes. Can be bad.
Depending on what you're drinking, there can be quite a severe hangover. Boom or bubble? It's an interesting concept. I think there's a number of things that's where we are at the moment and potential implications going forward. If you look at, I'm going to go global to start off with. There's a lot of things happening around the globe. Brexit is going to have some impact. We're not sure what it's going to be, but there's definitely going to be impact with the UK and the Euro, and potential impact of that in Asia. We're slightly unsure, but there will be some impact. Coming back to Vietnam, in terms of what we see at the moment, there is a huge amount of supply coming forward in that mid to higher end bracket in the residential sector. There is, as John and Olivia mentioned about what these guys are concentrating on is real demands, and you will always, 9 times out of 10, foreign investors will always cater for real demand. They understand the market and where the real demand is. What we're seeing at the moment is a lot of the local groups cashing in, for a better word, want of a better word, on a hot market, and the market is hot. There's no question about it. But we're in whether it's boom or bubble, we're in hot market. The sales rates and the launches that we're seeing are unprecedented in Vietnam. Whether that will continue, I have question marks over, and I don't think it can. I don't think it's sustainable. The numbers that we're seeing at the moment is not sustainable, and we will see a drop-off, whether it's next year or the year after, but we will not see this level of development and sales rates happening for the medium term. It's not possible. So we're sort of slightly sitting on the fence. We're betwixt and between a boom and a bubble in my view. At the moment, we are still in boom time because all the numbers that we're presenting would suggest that there is demand, whether it's investors or whether it's speculators, they're buying the units. And this happens throughout in all markets throughout the world. If you look at London, if you look at London property market at the moment is dominated by investors. It's overseas investors from China, from the Middle East, that are investing in property. So you're going to see a lot of developments that are empty on completion because they're purely for investment purposes. And we all know that the rental market, there's a very small pool of people looking to rent in Vietnam. It's generally the expats that want to, that are looking to rent. Small proportion of the Vietnamese society want to rent. So we're going to see a lot of these developments that are coming through in the mid to higher end sector that on completion, I believe, there's going to be a lot of vacancy. Whether anyone else has anything to add on that? Boom. Ish. Any other questions from anyone else? Anything you'd like to ask us? It's all free advice. For a limited. Oh, Brian again. Oh,
it depends on, okay, so for that question, yeah, good question. I kind of alluded to it, but not really. But it depends on whether it's residential or not. So if it's residential sales, then yes. If it's not, then it's a contractual agreement, so they wouldn't apply for a commercial sale. Say again? It would. I think it's still commercial because it sounds like a hotel. So if it were a hotel with the right to hop in hotel, then it would be treated as commercial. The challenge though is you get a lot of resorts right now who are sort of selling residences. So the question is, are they really selling it? Because if they don't have the residential right to sale, it's actually not a sale. It's more of a long-term lease, right? So that's a contractual agreement that gives you certain rights. And then you can opt whether to put your unit into a pool of available units, that kind of thing, condotel concept. So that would be a commercial transaction as opposed to a sale. So those rules would not apply. Having said that, what we're seeing is, and this is from our clients who are in that segment, that sector, they are wanting to mimic the residential sales. Because the general sense is that that's what people expect. So even though there's no requirement in the law, that is where the practice seems to be at the moment.
Sorry, maybe I'll add to that, and David cannot say it. But I think if you go back to his chart with the prepayment and the deposits on residential, because I saw a lot of people looking at the chart and sort of scratching their heads, and I think David alluded to it, but to be very clear, the practice in the market is completely different from that. Okay, so most or all developers in residential do not wait to complete all these conditions to quote-unquote take the 30% deposit, and even the 70% is something that is not necessarily compliant with a lot of local developers. And it's back to one of your questions, David, is how do we compete against the local developers? I think in that segment, especially affordable, you still have a lot of developers with relatively limited capital bases. Some of them were ex-brokerage houses, local brokerage houses, who are extremely good at selling. So in a hot market where you can put a small deposit for the land, you tell the landlord, here's 20%, I'm going to start selling now, and I'll just finance the whole thing with buyer's deposits. That works in a hot market. Now, if the market goes sidelines, if suddenly CPI is creeping up a bit and the banks raise interest rates, that business model is gone. And one of the ways we, hopefully, I don't hope for a correction or interest rates to rise, obviously, because it's headwinds for everyone. But if the market is a bit less hot, developers with stronger capital bases who are able to finance that period of the 0 to 30% and the 70 to 95%, will be at an advantage. And I think as a Luxembourg-based fund, similar to other foreign developers, that's where we have a card to play. Because we're less leveraged, and I think you alluded to that as well. There's a lot of leverage within the developers. So it's developers putting leverage, buyers putting mortgages, banks giving additional financing. So yeah, that sounds a bit like a bubble. But
generally, our view is that because you've got leveraging, such a high leveraging in all different areas, you've got developers, buyers. The banks are ultimately going to be there to potentially pick up the pieces or not. And what we've witnessed, my view on Vietnam is that I've never seen a country so the appetite for risk is high. And the only reason that I can put to that is because of the bankruptcy. There is no insolvency or bankruptcy legislation. So what are the consequences? There isn't. Or 5 years down the line, or whatever it may be. So until legislation changes and until that maybe comes into effect, I don't see that appetite for risk will continue.
Yeah, just adding on to that, I think a lot of people, and this comes up a lot. Like, the reality is this is what the buyers want. Very often I'll hear that comment. Developers say, but that's what our buyers want. And they want to make sure that they get their units, they're willing to pay deposits or booking fees, which is a large amount, because they want to ensure that they get their unit. And that's right. I think it's kind of like what Steve has said, really, where does the risk lie in a situation when the market turns? And that's really where the risk is, because in a situation where you're riding the market, then everyone's going to do what they said they're going to do, because they really want to get what they've signed up for. So when the market turns, then the risk lies with the developer, because what will happen is it's very easy for a buyer to say, this really isn't in compliance with the law, I'm not going to comply. And as a developer, you're in a very difficult position, because you will then want to enforce, you want to go to the courts to enforce something which is not supported by the law. So that will become a problem. And we saw a bit of that in, you'll remember, of 2007, 2008, when a lot of buyers who we had paid deposits and then stopped paying their installments subsequently. And that was the issue, and that's really what we need to be careful about, because it could repeat itself in that same way.
Okay, I think we have one more question at the back. Do you have a microphone? Why don't you run to them?
Okay. Hello, my name is Wen. As a foreigner, I think all the foreigners really wants to know, is there any new regulation regarding the foreigner, how before they should take care of the money when the money flies into Vietnam, and after they sell the property, how they can send back to their country?
Okay, good question. Yeah, it's always a concern, and I think you're raising that question because we have foreign exchange restrictions in Vietnam. So how do you make sure that whatever money that you get from, let's say you bought a property and then you sell it, how do you make sure that you can transfer the money out when you need to? So basically, there's a lot of talk about we need to have clear regulations about this from the authorities. There are no new regulations that deal with this specifically. We have regulations that deal with foreign exchange management. And those provisions are what we need to go back to, because at the end of the day, that's where the issue lies. So the general principle is money that comes into the country has to come in through official and clear channels and used for official and right purposes. So in this case, to buy property is fine, and then when you sell the property, then the money can be transferred out once the money has flowed in correctly. So the responsibility for the foreigners is to make sure that they follow all the right procedures for doing so. So how do you do that? So as a foreigner, if you're looking to buy property, the first person you need to talk to is your bankers. Tell them why you are doing what you're doing the transfer for, and they will tell you what you need to do to protect your interests. It's also a way for the authorities to regulate taxes, so you have to make sure that all the taxes are paid, so you have to comply with all these requirements, and once all these things have been attended to, there is no reason why the money cannot be transferred out of Vietnam.
Maybe just to add to that, David, what we're doing at JLL, because we are seeing quite a lot of interest from foreign buyers looking to buy residential property in Vietnam. What we hope to be able to announce, and I think we have represented here from one of the banks, is that at the moment it's all cash. It's very difficult to get a mortgage for foreigners to buy property in Vietnam. We hope to be able to change that, and one of the banks, a number of banks, but one of the banks in particular, are now looking to offer mortgage facilities for foreigners buying property in Vietnam, which is a little bit of a game changer because it opens up that foreign buyer market into Vietnam. So that will be coming over the next, trying to look at the right way, about 6 months maybe. Any more questions? I think that is probably about to a lot. Thank you very much, everyone. Thank you to John. Thank you to Olivier. Thank you to all the guys, marketing team, and a special thank you to Miss Chum. Miss Chum's hiding behind the desk there. She's not listening at all. Miss Chum is her last event. She's off to Australia. So a big thank you to Miss Chum and our market research team for putting all these slides together. Thank you very much, and see you next quarter for another exciting edition. Thank you.